Since my portfolio's creation, May was the month that I bought the least amount of stocks. During times like these, where there's recession fears and stock market crash fears, I want to be smart with the dollars that I invest. So in today's portfolio update, we'll be going over all my buys, sells, dividends received, and much more. And guys, if my voice sounds a little off, I'm sick right now. I don't know if I have COVID or not, but hopefully get better. But I can't be stopping this upload streak that I got going on. If you find this type of content valuable or entertaining, please, I beg, smash that subscribe button, smash the like button while you're at it, turn on post notifications, and of course, roll the intro.
Hello, I like money.
As I mentioned in the intro, I didn't buy a lot of stocks than I regularly do this month. We can see that my estimated yearly income only went up by about $3. You guys will see why this is when I show my buys, but I've been really focusing on, lower yield, higher quality companies and investing for dividend growth in the future. Don't get me wrong though, I still love my high yielders and I'll look to buy them this summer. My estimated monthly income went up by about 20 cents, my portfolio yield went up by 0.2%, and my investments that pay dividends stayed the same. Now, on to the dividends that I received in May of 2022. In May, the quantity of companies that pay out their dividends isn't as much as like June, but as you guys will see here, the payouts are definitely bigger than usual. And as per usual, I always reinvest my dividends to keep the dividend snowball rolling. To start off, we got $6.31 from AT&T, $1.62 from Apple, $1.44 from Colgate, $1.79 from Realty Income, $2.17 from Hasbro, 37 cents from Stag as per usual every month, a nice $7.25 from AbbVie, and $5.46 for one of my favorite companies that I hold, which is Starbucks. I like reinvesting my dividends in companies like Starbucks and AT&T because I think they're at a really good value right now and I'm getting my yield on cost down. But guys, if you think this dividend payout is nice, wait till you see June's next month. As I mentioned in my goals video during Christmas, I want to get to $500 on dividend income by the end of the year, or at least estimated dividend income. I've realized with the shift in my investment strategy with buying lower yield stocks with higher quality growth potential that, this may not happen, but I'm not going to beat myself up over it. Now, on to the buys for the month. To start off, I bought one share of Visa at $194.63. I have identified Visa as one of the positions that I want to have as a core holding in my portfolio. I think I got the stock at a tremendous price at $194, and I'll continue to dollar cost average and buy on dips. And finally, the last stock that I bought is one share of Disney at $101.47. Again, I got this stock at a 52-week low, and in my opinion, a very tremendous price for the quality of a company that Disney is. Hopefully, once Disney reinstates their dividend, hopefully at the end of the year, I'll get some extra dividend income back. Disney has a wide economic moat and are going to benefit from China reopening with their, amusement parks out there. Those are my buys for May, but now let's talk about how my investment strategy has changed over the last month. Historically, it shows that when inflation is at these levels, there's likely to be a recession. And while I am against timing the market and waiting for a huge crash to happen, I have to be mindful of this. That's why I'm going to be looking at the companies that survived the 2008 recession, seeing and comparing the qualities of those companies to the ones that I own now, and if they cut their dividend or not. In conclusion, I'm going to keep buying and dollar cost averaging in every month, but I'm going to be a lot more mindful and aware. And guys, I have $500 in my Ally Bank account. One thing for damn straight. If there's going to be a crash, I'm buying in, baby. Now, here's a clip from Warren Buffett on what to do during a recession.
About the fact that the market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. I mean, we're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. So when stocks are down, we're going to be buying on balance. And who wouldn't rather buy at a lower price than a higher price? People are really strange on that. I mean, because most of your listeners are savers, and that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price, but they have that feeling that they just feel better when stocks are going up.
Guys, we've been in a bull market for like 2 years now, and if I told you in December, hey, you could buy Home Depot, 30% down, would you buy it? And if nothing fundamentally changed with the business, of course you'd say yes. With my current situation, I just want to be smart and conservative with my cash in case something does happen so I don't miss an opportunity. Thank you guys for sticking to the end of the video, even with my groggy ass voice. I really appreciate it. Keep buying stocks. And of course, smash the like button, subscribe, do dividend stocks, not drugs. Have a good one.